Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. Today, we're finally going to talk about a positive wheat story. We're going to talk about wheat rallying today. One day, at least, it has rallied. We're also going to talk about a pretty big, massive surge in crude oil and its effect on the soybean and vegetable oil markets. Yeah, it was just a positive day overall. So let's get into what happened in markets today. We saw canola up $6.30 at 633.80. That's against the January we're watching now. Minneapolis wheat was up over a dime, 10 and a quarter cents, up to 5.49 a bushel. Kansas wheat was up 11 and a half cents to $5 even. That's against the December. Chicago wheat was up 9 and a quarter to 5.13. Beans were up 12 cents at 10.62. Corn up a nickel at 4.28. Soybean oil up 8 tenths of a cent at 50.8 cents per pound. Canadian dollar traded to 71.47, at least at the time of this recording. Live cattle got some gains today, $1.35. Feeder cattle down a little bit at 360. Still on some Trump comments that upset a lot of ranchers yesterday. Let's get into wheat though. Here's what the HRW wheat looks like. We start with HRW because we think that at this time this is kind of the market leader, or at least I think it's pulling spring wheat around with it because the MIAX futures market doesn't give us a lot to trade on as far as volume or open interest. So I think a lot of people are looking at the HRW contract as kind of the dog that wags the tail, so to speak. So we did see a trade today above the 20-day moving average. This is a very counter trend move today, but it did trade above the 20-day moving average, but kind of got stuck here at this resistance level, which is the channel that this wheat market, this very skinny channel or thin channel that this wheat market has been trading under. It's hard to say that this is a turnaround Thursday, as it may, as it has been trading in this pattern for quite some time. We hope that there's some follow through on this because I think the particularly the Western Canadian farmer with wheat needs some reprieve from lower prices. We are also seeing some basis premiums and things like that being added on. So in the western part of the Canadian prairies, we are seeing some 750s, maybe even higher in some elevators. That kind of tracks as you move east a little bit lower. So you might be getting $7 or even more in some of the eastern parts of the Canadian prairies for spring wheat, at least a 113.5. So at least some positive movement with yields the way they were, that could be getting into some profitability area. So we would encourage you to take a look at that because you can always get in on paper if you want to, or using some fancy contracts that are available out in the marketplace right now. Just to kind of look at what happened in the other markets. Here's CBOT wheat. Now, this one was good because it did trade above the 20-day moving average, and we did see it kind of trade above this trend line as well. Not necessarily as defined of a channel, but more of a declining channel here. So that's a good sign for CBOT wheat. Again, we generally look at the CBOT wheat as kind of the anchor in the wheat market, even though I still think that HRW is more of the anchor for spring wheat or wheat with a bit of a protein premium. So good day in wheat. Love to see this in wheat. I think it's giving some farmers who have been holding on for a little bit, even for a 20, 30, 40, 50 cent pop in cash prices, to take advantage of this little rally at this point. So don't be ashamed to sell into this rally. We do hope that it continues. Of course, obviously, this is a seasonal time of year where we see the lows of wheat. But given the fundamentals in wheat, it's going to be a tough year to get really big rallies, I think. I hope I'm wrong about that, but that is kind of our assessment going forward at this time. Here's what spring wheat did. Again, it's a little bit more muted compared to the other ones, right? Spring wheat's a tough slog right now. I think a lot of that has to do with the exchange it's trading on. We did pop above the 20-day moving average. We've done a couple of head fakes like that over the last little while. We haven't gotten up above that trend line resistance yet or anything like that. But the rest of the wheat markets looked relatively positive today. Another extremely positive story today, or at least an upward trending market today, was crude oil. 2 days we've seen some very strong gains. Now, it wasn't quite a gap higher today, but in the past couple of days we've rallied from, call it 57.50 to 62.50 I think it closed today at 61.80, but just big gains in the crude oil market. Of course, that has to do with the U.S. hitting Russia with or Russian oil companies with sanctions yesterday, and he also accused the Russians of a lack of commitment towards ending the war in Ukraine, and that was as Moscow conducted a major training exercise involving nuclear arms. So there are some things that are escalating there. The new sanctions were unveiled one day after plans for a summit between U.S. Donald Trump and Russian President Vladimir Putin fell apart. Trump told reporters he canceled the meeting because it didn't feel right to me. So obviously, he's looking for better peace talks between Russia and Ukraine in order to move things forward. And uh, yeah, I actually applaud President Trump for this one because I think he needs to take a bit of a harder line on this conflict in order to get it resolved, just like he kind of did with the Gaza and Israel conflict. All right, the U.S. wasn't the only one to pile onto this, though. Chinese state, oil majors have suspended purchases of seaborne Russian oil. So the fact that they made that distinction seaborne means that any pipelines coming from Russia may still be active. But this was in response to or after the U.S. imposed sanctions on some of those oil companies as well. This move comes as refiners in India, which is the largest buyer of seaborne Russian oil, are set to sharply cut their crude imports from Moscow to comply with the U.S. sanctions. So everybody's kind of piling in on this, and that had a big effect on the crude oil market today. The good thing about that is it did have a positive effect on the vegetable oil complex. So we did see some gains in soybean oil today. These aren't huge gains, but this is a result of the crude oil market moving higher. Of course, soybean oil and ethanol and things like that are correlated now to the price of energy. So this was a positive story overall. This, of course, the soybean oil rally had a positive effect on canola. This has kept canola above the 20-day moving average. That moving average is acting as some pretty good support here in this market over the last week or so. And as you can see, we're continuing to stay above the trend line that we broke above last week as well. Soybeans proper looked really good today. We shot up and closed at near the highs or at the highs of the day at 1062. We could see some legs here, another dime or so as we get into the 1070s. That would be probably a good place to put some targets in, some futures targets. We could also push up as high as the 1080 area, but I think this might take some work, particularly given the fact that China hasn't bought any soybeans from the US. A lot of this move higher since the middle of October here is predicated on positive trade talks between Trump and Yi when they come to the end of the month here. So, it's a bit of a fragile rally. You might want to take advantage of it or at least limit some risk in this market as a result, although I'm still hoping for a relatively positive outlook or outcome from the meetings at the end of the month. Here's December soybean meal. Now, this has been rallying as well from the middle of the month. And what's interesting about this is, when you look at oil share, so this is the share of oil profits or the value of oil in a soybean crush. And as you can see, it has fallen apart recently. That's not necessarily a bad thing, particularly for the soybean market. Again, the soybean proper, because the meal is rallying, and the meal is 80% or so of the soybean crush. It gaining more. If it's going to continue to rally, that means it's gaining more value on the soybeans. It becomes more important, which means the soybean oil becomes less important. That may be a good thing for soybeans if this rally continues. All right, let's look at December corn here. Here's one interesting one where, again, I'll call him a friend. A commentator that I follow in the US named Joe Vaklavic from Standard Grain, talked about maybe adding to sales in the corn market today as we kind of get up towards this, there's a double tap of resistance here near the 430 area. I mean, we're trading 428 or we closed at 428 right now. Waiting until it gets to that absolute resistance level, playing off, it's two pennies up higher. So if you have been waiting to market some corn on a rally, this test of resistance might not be a bad place to do that. If you are new here, you can get our premium content at canadianagmarkets.com/subscribe. You get morning market analysis. You get weekly in-depth analysis, which includes fundamental information, technical information, and even educational information, as well as some timely and actionable information like our hot takes and these YouTube videos. You can subscribe at canadianagmarkets.com/subscribe. It only costs you $99 a month. You can cancel anytime. So very low risk for you. Good information at very low risk. Also, smash that subscribe button if you like our content here. That is all that we have for you today. Thank you for joining us. We will see you again tomorrow.